Welcome to Dennis Money's 2 Cents, your weekly recap of headlines and stories. I'm Matt.
I'm Victoria.
And I'm Rabih.
Oh, there it is.
It's just for Rabih.
Oh,
Okay, cut it off.
keep it going.
Rabih, that's for you. So we were just saying before we got on, I've never felt more boomer in my entire life, which is saying something. In fact, Victoria's response to that was, really? Because I'm apparently a boomer, but I cannot figure out this software connection for our software to Facebook. So this isn't live, guys. I'm sorry. We were going to post a video after the fact. I make a commitment. I make a promise that at some point in the next 12 months, we will be able to go live with this new software. For the record, I had Victoria helping me. We were trying to figure this out.
Yep.
We will. Becky is sending me videos, tutorials of how to do it. For some reason, we can't get the connection. Either way, we're here. We're going to post the video. Okay, so for today, we have a few things. Of course, a market and economy update from Rabih, the star of the show, always. I actually talked to a client today. He was saying how much he loves 2 cents. And so that's always nice to hear. And then we're going to talk about decision fatigue from our study buddy, Victoria, always getting the studies going and making us all look bad. And then I scrambled last second to find something because I've been figuring out the software stuff. And we're going to talk about kind of broadly the asset classes, how they perform kind of in the short term after the Fed makes a move specifically around cutting rates. So let's jump in. Rabih, hit us with that market update. I promise you I will keep my fingers off the soundboard.
I appreciate it. So starting with the market update, last week we did receive the unemployment data. To give you some background, in November or in October, the October figures that were released in November showed unemployment rate at 3.9%, and it's the highest it's been for, I guess, a decade, like excluding COVID, of course. We didn't get unemployment at 3.9, and the Fed expectations were that we'll be around 4.2 when, they get their job done, which hasn't been the case. Last Friday, we received the unemployment data, and actually it dropped down back to 3.7%, which is a huge indicator for a robust labor market where people aren't really getting fired, people are actually getting hired. And usually, previously, when we get that type of data, the market would react negatively because it means inflation is staying for longer and the Fed has to raise interest rates. But this last time, even when unemployment data came in very low, the market still reacted positively. And this is kind of related to how strong Q3 of the GDP has been, because even if the unemployment rate is still low and your average hourly earnings are increasing, if you are being productive, it's fine that they are increasing as long as they are not increasing more than the increase in productivity. And as it seems, just because the Q3 annualized GDP has been 5.2%, the jump in productivity has been so high that even with the increase in hourly earnings that we noticed in the data last week, it's still disinflationary in a sense. So that made it all look good that, yes, we are on the right track and inflation is getting tamed, although unemployment is not budging, which is, a first for how the economy is working out. Today, to look at the other side of the equation, the CPI data came for November, and there hasn't been really on a core level a change from the data for October. So 4% core CPI for November, 4% for October, 4% for November. They are the same. They stayed flat. The headline CPI, the one that we all look at and the most reported on, it came in at 3.1%. So inflation is kind of gone sideways for the past month, and that is good news because increasing inflation is what would freak out the Fed, what would prompt the Fed to start adding more interest to the interest rate cycle.
Increasing rates.
Exactly. So given this information, and as we talked about in previous podcasts, what remains is one more event, which is the Federal Reserve meeting and the summary of economic projections. Those are going to be released tomorrow, and we're going to talk about them on the next 2 cents. But
teaser.
teaser, but given that this is the only remaining data coming to the market before the end of the year, it's going to depend on sentiment, on how like the market moves from now till the end of the year. And given that the data is coming at a no change, which is good news, sentiment is going to help with the Christmas rally that everyone talks about.
Yeah,
So,
I want that Santa Claus rally, Rabih. Just tell me if there's going to be a Santa Claus. There already has been.
yeah, look at the data.
Yeah.
Unemployment dropped back down. It means people are getting hired. Those hired people are going to spend on Christmas, right? So from an economic perspective, it is there, like the infrastructure to fuel it. If new information comes in, that might be the case. And transitioning from that, we're going to talk about the soft landing, because they increased, interest rates, inflation went down, but unemployment is doing good, the economy is doing good, people are still spending. Is this a soft landing? And Matt, and you and I were talking about this in the office today, and
Because we're nerds. Because we're nerds.
We are nerds. There has to be, like when we say, are we going to face a recession or a soft landing? I think it's a two-part answer to this question. And that's because the fight against inflation might be nearing its end, but the impact of that fight, what it left on the battlefield, and the repercussions of higher interest rates actually shift the way we need to deal with the economy going forward. So yes, the economy is not going to go in a recession simply according to the latest data, simply because we increased interest rates to battle inflation. But this does not mean that throughout next year, 2024, if interest rates remained as high and, like, technically speaking, in a restrictive monetary stance that slows down the economy, we might trigger ourselves into a recession simply because we did not decide to take our leg off the brake quickly enough. And the Fed is, at a Sophie's choice, where they don't want to start cutting interest rates really quickly, because runaway inflation might show up and that will hurt their credibility. So they are more inclined to not start cutting rates until something actually breaks in the economy, although we see so many cracks around.
But then you're saying the problem might be that it could be too late. So they're really threading a needle here.
They are threading a needle. So, and the part where it is like a two answer solution for that question. One, they tamed inflation without breaking the economy, and now they have to know how to take their leg off the brakes before breaking the economy for us to call it a soft landing, or else we just delayed the recession a year, right? So as new data comes in, we'll be like revisiting this question, but it's very important to not just raise your hand in victory that you said, yeah, we had a soft landing. We still need to manage monetary policy going forward in the right manner.
This is why I do not envy their position, honestly, like how hard, like even to describe what's happening, let alone having to manage it, such a battle. So I want to come back to one thing you said just at the very beginning, talking about, because we've talked about this before, right? When data comes out, the data is neither good or bad. Context is what matters, right? Yes. And you were saying when 6 months ago or a year ago, when unemployment figures came out, under normal circumstances, that would have been really positive, would have been great, and would have driven growth in the market, actually had the opposite effect because we were so concerned about inflation. To summarize what you said, though, about that data point, tell me if I'm hearing this right. You're saying that because inflation is looking like it's been controlled, now we're saying we're back to kind of like, okay, unemployment actually looks like those are actually good numbers. It's dropped back down, productivity's up, inflation's controlled. All is right in the world. Now we can get back to normal and reacting to that in a positive way. Is that a fair summary?
Yeah, but very, very fair.
Okay.
Because unemployment has been down. It means people are getting hired and they're getting pay raises. Is that pay raise driven by inflation or an actual productivity? The latest data shows that it's actual productivity, and we're fine with that.
Got it. So my last question on this, Rabih, is despite many attempts from many different angles to kill the U.S. economy, it just will not die. Famous last words.
We don't want it to die, man.
We don't. But you know what I'm saying? Like, meaning there's so many threats happening and people are pointing like, this is going to be it. This is what puts us in a recession. This is going to be what puts us in a recession. Everyone's calling for it. At some point, it's going to happen. It's just the natural cycle. We've had 9 since 1960. It just happens. From your standpoint, pure opinion,
Okay.
what are maybe the 1 to 3 threats that you see as being like the legitimate threats that you're like, okay, this isn't just like sensationalist media. What are some legit threats you see actually putting us there if it does?
Oh,
I didn't
under the
prepare you for this. I'm
spotlight.
putting you
Yeah,
on the
you did
spot.
not prepare me for that one.
My bad.
It's fine. It's fine. But
I knew you could handle it. Is
from
why
a
I did it.
financial perspective, given that the interest rates in the US are higher than the interest rates around the world, this simply prompts international investors to keep funneling money into the US. So it's not going to be a liquidity problem or a credit problem that actually pushes us into a recession. AKA, we might not really think that the consumer is going to take a hit. I would bet on an exogenous event, AKA, if the consumers aren't the ones who are going to be affected, it has to be how do I say it in a nice way? Like companies are not managing the risks in a mismanagements of
being
risk,
idiots, being idiots,
being idiots, whether because they are over leveraged, like companies or funds, they are over leveraged, or companies are not managing their own operation and daily liquidity correctly, that might prompt people to get fired. And it would be a shock to the system rather than the system itself slowing down, simply because the US in a better position, and simply because the US is in a better position vis-a-vis other countries that are in a recessionary environment. Money is flowing in. It would not cause the consumer to get weaker. But if we do something wrong, as in we don't do business the way it should be done, frauds show up, companies go bankrupt, that will affect the consumers, and that would put us into a recession. So keep your eyes open for
that. Makes sense.
breaks.
No, you're saying again, mismanagement at the corporate level, people, like you said, mismanaging risk, being idiots, being greedy, whatever that may be. Internationally, are there fears or risks around, for example, China, right? And or just don't even think of like a specific country, but you're saying the US is doing so much better than other parts of the world. Are there issues we should be thinking about as like Europe or China or whatever causing issues in the US or having a ripple effect? Rabih had no idea this was coming. I love
You're
this.
coming at him hot
which is
today,
good.
Matt.
I'm just so curious. I love this stuff.
It's fine because it allows me to think out loud, and those are very important for us to like stress test our portfolios. So if we're stress testing our portfolios, those are really not going to be significant for a long-term investor, right? It's just the way things in the portfolios that are changing. And given like what can other countries do wrong or unintentionally do that might hurt the US are very small, simply because like the US, we've talked about this like on Client Huddle and stuff, is like self-sufficient in terms of its energy, in terms of its production, in terms of its economy. So what might happen outside that would affect us, other than supply chain interruptions like what happened in COVID? Nothing would happen. Like China, since COVID has been in a recession, it's not being able to get out of it. They have a big problem with their real estate and they're not able to recover. Yet this didn't have a spillover on US consumers and the ability to US demand to stay strong. So it is very hard. It's usually when the US takes a hit that the rest of the world really gets affected. But when the rest of the world has a localized problem, the spillover effect due to the US is very diminished, simply because the US is very sufficient on its own economic capital. What might go wrong outside that would hurt us, other than something very severe? We're talking about like a huge disruption of supply chains. I don't think it would happen. You need a hit to oil, you need a hit to like raw material, or else
a global pandemic.
Else the US is in a very strong position.
Awesome.
They might sell US bonds, but and because the US is printing and the gold is at an all-time high, and there's this whole, we can make a whole podcast about this. But even with all the printing up until this level, half the debt that's issued by the US are held by actual Americans. So you are funding your own government. So even if the rest of the world, and by we mean the rest of the world, we mean Japan, because they are the largest holder of US debt, decide to dump US debt, and this is like finance fiction, it's not gonna happen, the US won't get a big hit as much as we think. The demand for newly issued treasury is so high. So from the raw material perspective, from the financial perspective, it all seems that there are mechanisms that show robustness in the US economy. So I wouldn't really pull the fears out of proportions. And if you don't stop me now, I can keep going.
No, I love this. I love this. This is actually, first of all,
oh, that's why you asked me. I fell for the trap.
you need it. You deserve it. You earned it. No, I was just, we're testing you because this is a little bit of a teaser for 2024. We're maybe thinking about possibly expanding some content and education around investing. I'll leave it there. And we were just testing Rabih to see if he can handle questions on the fly, because more to come on what we're going to be doing with 2024.
And of course he can handle himself.
Obviously, I had zero doubts whatsoever. He also earned the clap.
Me, on the other
sound
hand,
effect. You're going to get one too.
Oh, no.
Okay. Thank you, Rabih. That was amazing. Study buddy, Victoria, talk to us about the latest study you found, and maybe if it's good enough, you'll get a clap. Who knows?
Oh my God. So if it's not good.
A classroom suddenly.
Yeah.
I know.
I does feel like that. I don't know what I'm feeling. I don't know why I'm doing this today. This is not normal. Okay, let's
because
try
Rabih
that
and I
again.
are like the
Victoria,
office twins.
let's try this again. Victoria, to you. Let's talk about your study, and it's going to be wonderful.
No pressure.
No pressure. Thanks, Matt. So my study buddy topic of this week is around decision fatigue. And I brought this topic up because I feel like a lot, kind of recently, I've been helping a lot of clients with a bunch of different decisions. And it just really put into perspective just how many decisions an average person has to make, and then a dentist, where their lives are so far more complicated than the average American. So I did some digging on decision fatigue. And did you guys read my notes? The question is that I have for you is, how many decisions on average do you think an American makes
During the day?
during one day?
Over 100 for sure.
You're nowhere close, Rabih.
I think I've heard this before. And I genuinely have not looked at your notes. Sorry.
No, this is a good thing. In one day, how many decisions? And it's like every single, I'm going to turn right. Oh, now I'm going to turn left.
I'm going to risk this because I've heard this before. I'm pretty sure. Okay. I want to say it's somewhere in the range of 30,000.
Okay. Rabih?
But that could be so far off. I'm making crap up.
Rabih's like Chat GPT.
No,
Rabih is running the calculation and regression scenario in his head.
Let's assume a person makes a decision every 30 seconds.
Okay,
how many 30 seconds are there during the 12 hours that you
are
awake?
Is.
That's my
answer. There it is.
Okay, give us the answer.
Well, you're really close, Matt. It's 35,000.
Ooh, okay. I knew I'd heard something like that.
A day for the average person. I thought that was so ridiculous, but then I was thinking all of the little things that even just go on in my morning before I get to work, and there's hundreds of decisions there, I mean, for me it's what the heck do I wear? What do I eat? There's so much in that, and then every decision you have to make at work. So I don't know, it just kind of got me thinking about that. And there's this concept about decision fatigue that's been studied a bunch. But there was this one particular study that came out by UC Irvine a few years ago, and you'll like this, Rabih. So they ran the study on analysts who make forecasts on, market companies and things like that. So what they wanted to find is how do I phrase this? Does the accuracy of your forecast basically go down as the day progresses? And the answer is yes. So basically, as the day would go on, what they found is analysts would kind of start to lean into biases, start to round numbers, reiterate previous forecasts, kind of go with the consensus. So that was kind of throughout the day, they started to lean towards that. And I feel like this makes sense, right? We all have
They're getting tired.
They're getting tired. We all have, it was interesting. I read this in the study and I was like, oh, wow, I've never really thought about it this way. We all have a very limited capacity on the amount of decisions you can make well during a day. So it's almost okay, if I know I have to make these important decisions, how can I structure my day or my energy to really conserve it for the really important decisions? So back at a previous firm, we would always encourage people to try to meet like in the morning where you have more like mental energy to put towards those really important decisions. So I just thought that was really interesting because, like I said earlier, dentists have to make thousands of decisions, probably above the national average. And, you know, by the time they get to their end of their day, it's like, I don't even care anymore. Like, I don't care what I eat for dinner, or maybe you shouldn't have a financial advisor meeting at night. I don't know. And
Yeah.
that's what I found.
No, that totally makes sense, Victoria. And like you said, it's kind of intuitive, right? Like you said,
Yeah.
the willpower, the fatigue setting in, the ability to make good decisions throughout the day. So I like what you're saying is giving some practical tips of saying, like we talked about this before when we were kind of talking about the just general kind of idea of the study. And you've already said it, like big decisions, like this could be something really easy is just don't leave big decisions for the end of the day.
Yeah.
That could be that simple. You also mentioned, can you talk about, you mentioned Barack Obama and some of the tactics he used. And I've
Yeah.
heard this kind of stuff before, but I think it was really insightful.
Yeah. So they brought in the studies, just some like anecdotal experiences. So Obama would limit his decisions on clothing and what to eat and kind of some of the things he could delegate so that he could save some of his energy or more of his energy for, you know, the world decisions. And you also see this with like Steve Jobs and Mark Zuckerberg. Like,
Yep.
what outfits do they wear? The ugliest. But they like.
Wow. I did not see that coming. I thought you were going to say like the same thing all the time. No,
Yeah,
the
like,
ugliest.
isn't
Okay.
that why you wear like really simple clothing, Matt?
That's exactly why.
That's
That's
like
it.
what you do, right?
It's funny you say this. I'm not kidding you. I basically rotate 5 or 6 of the same items on top and bottom, and I don't even think about it. I have basically 2 pair of shoes, and I have like 5 tops, 5 pairs of pants, and I just rotate. And I don't even think about it in the morning.
Yeah,
So
yeah. Sorry, I had to roast
apparently,
you for that one
I
because Rabih was
appreciate it.
roasting my outfit a couple weeks ago,
Yeah,
saying that I
I
looked like
appreciate
freaking
it.
Elvis Presley.
I love how you go from Steve Jobs and Zuckerberg being or dressing ugly, and then you're like, isn't that like you, Matt?
It's like what you do, right?
Yeah,
It's so that
exactly.
you can run this company well.
Exactly. So, okay, so to summarize some practical tips that someone can take away from this, I think what you're saying is thinking about timing of decisions. I think number one is just being aware. I think this is really important of being aware, right?
Yeah, I like that. Just kind of knowing, like, if you have a big decision to make and it's towards the end of the day. Well, and the other thing too, well, actually, I interrupted myself. I'll finish this first. If you know you have like a big decision, like maybe just having that awareness, like, am I tired right now? Is this a good time? Like, literally, just I know this is hard for dentists because they're so busy, but just taking a beat and saying, like, am I even in the right headspace to have this conversation with my advisor? Like, should I just reschedule with them because I'm just not in the headspace to really soak in what they have to say to me? And that's fine. We'll take a reschedule all day. But the other thing I was going to say as I interrupted myself is they also brought in some like stats around how parole like judges make decisions, and you are more likely to get a harsher sentence if it is right before lunchtime and it's right before the end of the day. So even I say that to just say, like, having awareness, like you said, Matt, around like, how is my mental state? Am I hungry? Am I tired? And just taking a beat, even if it's just 10 seconds to check in with yourself before you're making some really difficult decisions.
Yeah, I think that's huge. The awareness, understanding the power of your environment, understanding the power of things like being hungry, being tired,
Yeah.
how long your day has been. I think that's really practical and helpful tips. I think the other part of this too is we talk about this, the need for outsourcing certain thing like your mental load, right?
Yep.
When possible. So again, that could be something like having the same items of clothing to wear every single day.
Advisor.
Yeah. So yeah,
Or
all the way
financial
over
advisor.
to hiring and having a team in place. Like, yeah, self-promotional here, like having an advisor, but like having a team in place that you can offload. And this could be internal to your practice, right? Your office manager, a trusted person you can delegate to decisions that fatigue you This is kind of the difference of like working in the business as a dentist versus working on the business.
Mm.
Offload as much as you can that's in the business so you can work on the business. I think it's kind of what we're talking about here. So
Yeah.
that's awesome. Study buddy, any other things that you'd summarize? Or Rabih, any thoughts from you on this study?
It's interesting because once you start looking at life from the perspective of like how many decisions I am making, I think the best way to trim out of them is to have a routine, and like how underrated a routine is.
Mm.
And this applies too much for like investments, because if I'm worrying when should I put money in the market and at what frequency and what should I look at in terms of metrics just to make sure I'm entering the market at the right time, right? All those decisions fatigue you. But if you are just following a certain predetermined rule, as in on an annual cadence, or according to a certain threshold that once it gets crossed, the investment decision making just becomes much streamlined and easier going forward. And it's thanks to the routine, because then you know what you're trying to do. From personally, like the first time I drove a car, it was so exhausting, but now we all drive a car and we don't really think about it. So yeah, if you have a routine, you don't have to wear turtlenecks like Steve Jobs.
No, I love that perspective, Rabih. Like, because I'm even just thinking like the stress around like when is a good time to invest, like, or not having a routine when you're investing, like that creates so much added stress and makes a decision even more complicated than it really has to be. So if you can lean on a routine, that kind of helps like offload a lot of that stress so you don't even have to think about it and you're working towards your goals. Like, I think that's really key. And I feel like this conversation could be like in the January webinar of like, aren't we doing like goal setting and whatnot?
Yeah,
like maybe
we're
we
gonna talk
should
about that.
incorporate that for sure.
Yeah, this is great. I love this. So we were saying, be aware, set up the right environment with timing and structure of your day, outsource whenever possible, build a team, and then have a routine. It's kind of what I'm hearing out of this. So I think those are practical tips to take from this. And study buddy. I mean, come on, get out of here. Get out of here. That was maybe one of your best studies you brought to the group. So I love it. I also made a decision. Sorry, I'm doing this, but we're gonna tease. We're gonna hold off on my item, and the main reason being is I want to be respectful of time, obviously, and I think we can end it there. But also, I think it'll actually be better because we'll have the Fed decision and the Fed comments. So what I was going to talk about and what we will talk about next week is a little breakdown of asset classes and what does well in a rate cut environment versus a stable environment versus a rates being raised. So we'll talk about that next week. And we just like to, tease a little bit, just leave a little cliffhanger so people tune in. So, okay. Any final thoughts, words, concerns, anything from you two?
I still want to know whether people like the background noise that you throw at us. Like, I need to hear. I need someone to back me up.
You know what, Rabih? I think they love it. Listen to the people. Like, you know what I'm saying? Like,
comment if you think we should keep the soundboard or if we should take it away from Matt, please.
That is a live audience. If you don't like it, if you despise the live audience and their excitement for us and our comments and thoughts, then yeah, let me know. If you're a killer of joy, if you want to kill our joy, then go ahead and let me know.
Rabih is our little Grinch.
If you're like Rabih and you don't want to have any fun, then sure. Then
comment team
let me know.
Or team Rabih.
Ooh, yeah, we're causing a little controversy here. I love this. Rabih's gonna win. He's gonna win
overtime.
I think so. Okay. Victoria, Rabih, thank you so much. Everyone, thank you for listening. We appreciate you so much. In all seriousness, we love advice and feedback, not just on the soundboard, but just the topics we bring, the insight, anything you want to hear from us. Please let us know. We will, as you'll know very soon, we're coming out with an episode on the main show responding to a Facebook comment. Like, please comment on our Facebook group or send in email questions. We'll respond to them. So we really appreciate the listeners. That was our 2 cents. Everyone, take care. Till next time. Bye-bye.